Thank you for the introduction. Obviously appreciate the opportunity to speak at the conference, and if I haven't met all of you at the booth yet, we're at booth 78, so you'll get a small sort of introduction to what Okapi is now, but if you want to find out more, please come past afterwards. But fundamentally, Okapi is a uranium company in North America. That's a disclaimer. And we have a uranium company in North America. We have a very clear strategy on what we want to do. I've been involved in the company for the last 4 to 5 months. And since then, we've built out the portfolio. We now have 4 uranium assets in North America, 3 of them in the US. We also have 6 different projects in the Athabasca Basin. It's been an extremely busy time for us, and we're extremely well set up to benefit dramatically from the dynamics in the US uranium industry. Our portfolio of assets are diverse. We already have a 50 million pound resource at our Tallahassee project in Colorado. That recently increased by 22 million pounds when we announced the acquisition of a 51% of that Hanson deposit. We did that in an extremely well structured deal to limit dilution for us up front, but allow us to get our hands on the asset. Our strategy is clear. My background is in mining private equity. I spent 7 to 8 years living in North America where I was focused in the uranium industry. I took the Reno Creek asset along with the team from pre-scoping study, pre-resource stage, all the way through permitting, through to a full NRC license until we sold that project to UEC back in 2018, which has gone on to be a great asset and stepping stone into Wyoming for those guys. But we have a clear strategy. I've done this in the past. We know exactly what assets do and don't work in the uranium industry, along with all the other industries. A lot of these assets have been recycled. We know from a permitting perspective what works. We're industry experts at ISR, in situ recovery, and that's what we're pushing for. We'll also do exploration. We're setting ourselves up to be able to explore on 4 of our projects over the next 12 months. We've already got permits in Athabasca. We've got our permits in Utah. So we know how to work with regulators. We know how to work with all stakeholders, which is very beneficial. We've grown the team dramatically since I've joined, brought on a new chairman, Brian Hill. He's based in Denver, which is very handy because it's close to the assets. He's a US citizen, lived in Australia for a long time. He was with Newmont. He was the CEO of Newmont for a period of time. So very highly respected, very highly experienced mining executive that I've worked with and we know well. We also brought on some of the ISR team from Reno Creek. Jim Villeneuve is now working with us as a consultant. We brought on Alan Roberts, who's spent 30 years in the US space on drill programs. So we've got that expertise and we'll continue to build that out as we move forward. This is our corporate structure. I think the key things here to understand is, 1, it's very tight, only 170 million shares outstanding. It's a lot of insiders own the stock, which is helpful, and it hasn't been a particularly marketed stock at this point. I've recently joined, been very focused on the assets and setting the strategy to help us deliver returns for shareholders over the coming years. That will change in the next couple of months as we look to get the word out there and tell everyone what we plan on doing. The other important thing is we just completed our OTC listing, which I think is going to be very important for us with a US story, getting that story out to the US retail market. I think it will resonate extremely well with them. And I think that's going to be an important part of our liquidity going forward. This is a map of our assets which paints a pretty clear picture of what we're trying to do. The Tallahassee project, which is the one where we have a resource of close to 50 million pounds, is based in Colorado. It's about 140 k's southwest of Denver. It's near a city called Canyon City. It's a very historical mining district. A huge amount of work has gone into the Tallahassee project, which I'll show over 350,000 meters of drilling. The sunk capital that's gone into the asset. If you tried to do that again today, you'd be spending a huge amount of money. We also have our Rattler project, which is in Utah in the La Salle district, which has been historically in a very important uranium district in the US. It has helped feed the White Mesa Mill, which Energy Fuels own. We also picked up our Maybell project, which is in the northwest of Colorado. We're very, very grateful and very swift to pick up those claims, which we effectively staked. It's a historic mining district, produced historically twice in the past. It was a heap leach project, which was attractive to us because that means it's potentially amenable to being ISR. And we've just in the process of quite a lot of historical data on the project, and we're in the process of just systematically going through that data to better understand the projects and what the next steps are. But And then we have our Athabasca projects, which I touched on. We acquired these in February, did a very detailed due diligence process to understand exactly what we got and what we can do with them very forward. I was very focused on making sure we were picking up the right exploration properties, not just picking up properties in the Athabasca so we can say we're in the right postcode. So we have a clear strategy on what to do there. We're planning on probably getting out to 4 or 5 of those different projects in the summer field season, North American summer field season, so June, July, and look to be drilling on 2 of them in the winter. So call that January, February, March next year. This is a pretty key slide in terms of understanding our valuation proposition. I think the uranium sector has been in a reasonably good space over the last 6 to 9 months. The interest has picked up. That's been driven by a few factors. One, 10 years of fundamental underinvestment into the sector. There's obviously a pretty severe supply deficit on the cards as we speak. There's been no real new discoveries in the uranium space for a fair period of time. Obviously, there's been a few interesting discoveries in Athabasca, but you know, what's happening in the US now, I think, is pretty profound. But look, we've got a 50 million pound resource and we've got a market cap of $32 million. And I think if you compare that to some of our peers, which do have more developed assets, but we are fundamentally undervalued on that peer comparison basis. And I take that to be just because we're a relatively new, unheard story, and we need to get out there and tell people what we have, and probably more importantly, what we're going to do to create value out of these assets going forward. The US uranium industry, nuclear energy isn't spoken about that much here in Australia, but the very simple story is the US has the world's largest nuclear reactor fleet, has 92 reactors. That accounts for 20% of all its energy demand. And that 20% has been pretty fixed for the last 20, 30 years. But what's happened is effectively the US domestic uranium industry has basically fallen off a gradual decay over the last 20 years to the point now where there's actually no domestic production of uranium. And they have become reliant on importing 50% of their uranium from Uzbekistan and Russia. And obviously that was fine until about 4 months ago, when that got a whole lot more complicated for them. And they were very quick to come out and ban the importing of coal, oil and gas, but they deliberately didn't do it for uranium because the US utilities couldn't handle it, right? US utilities are beholden to bring in Russian uranium. And this, I think, is setting us up very nicely for a very active policy coming out to incentivize US domestic production, right? You've got the world's biggest nuclear reactor fleet. They need to be able to source those pounds from places like Colorado, not like places like Uzbekistan. And I think the key thing to understand in the uranium market is just the price elasticity, right? So the cost of yellowcake, which is what the mines produce for a nuclear reactor, is a very small cost of the overall cost of producing electricity. And it only accounts for about 5 to 10% of that overall cost. So if the uranium price doubles, that doesn't double the electricity price at the end of the day. So the point is the US utilities can very much afford to pay an extra $5 to $10 a pound for US-based production because there's very little impact on the final electricity price, right? So you don't need to push that on the consumer. You can actually, deal with that yourself. It's very different to coal. The coal price doubles, electricity price has got to double. So we think we're basically setting ourselves up to benefit for this geopolitical insecurity which is happening in front of us today. And nuclear demand, China building reactors all the time, India building reactors all the time. You're seeing what's happening to Germany. That energy policy definitely seems to have lacked wisdom in hindsight. You've seen England come out and the UK come out recently and say they want to build a nuclear reactor one every year these days. You've also heard rumours in Japan about them looking to restart their reactors as well. So this is all setting us up for uranium to be a very interesting space to be over the coming years. This is our Tallahassee projects. This is in Colorado. These are the 50 million pound resource we had. The key points I want to get across here is this is a strategic size uranium resource in the US. Previously, when this ground was consolidated all by one party, you had nearly 90 million pounds. And in US terms, that is a big resource. The grades are good. Our grades in our current JORC compliant resource that we got out of 540 ppm, that stacks up very well in the US. It stacks up amazingly in relative to some Australian and African projects. And we're in the process of consolidating this district now. We've already done two deals to pull this all together. There'll be more to come. And we're very much in talking with the regulators now about how we progress this asset going forward. But look at all the historic mining. It's been fundamentally extremely well drilled out. I think there's been over 350,000 metres of drilling, right? So this resource exists, it's real. This was going to be a mine in 1980. Cyprus spent, I think, around $200 million here. And they were bringing literally gensets to site. They had the permits in hand, ready to go, and the uranium price fell out in 1980 and they walked away. So this is a very interesting asset and one we'll be definitely sinking our teeth into going forward. This is a bit of a closer picture, and the key thing to understand is I think just the drill density at that Hanson deposit. So the Hanson deposit is obviously there to the south within that blue rectangle where we just acquired an option for our 51%. And look, we'll look to fill in those sort of missing pieces going forward. When I joined, they originally had the Taylor and Boyer deposits, which are to the north there. We had an existing JORC resource on them when I joined at 27 million pounds. We've already got that up to 50 million pounds. So it provides us with sort of optionality in what we want to do. Hanson is sandstone hosted. We think it's potentially amenable to ISR. We'll go forward and do the work to confirm that. We'll do the hydrology, the permeability. We'll do that met test work in terms of the leaching to better understand that. There is a process involved to get permits. We're obviously got to go for the state and the county to achieve that. So we bring in sort of best in-house advice to help us through that process, but we're well set up to achieve it. And we hope to be working on this ground this year. Moving on to our Athabasca assets. These are the 6 projects we picked up. We acquired them from a company called ALX Resources. Closed the deal in February this year. We did pretty detailed DD. The key assets projects we like is one is our Middle Lake project, which you can see here on the left-hand side on the western edge of the Athabasca Basin. It's got all the neurology in the world that you'd want. It's 2 to 3 Ks from the old Cluff Lake mine, which produced over 70 million pounds. It was an Areva mine, so there's been some very interesting sniffs in terms of the drilling done there. The geological understanding of the basin has changed a fair bit over the last decade. All the existing Cameco assets were in the unconformity in the sandstone in the Athabasca Basin. Obviously, with the next-gen discoveries and the fission discoveries, they drilled through that unconformity into the basement rock. And there's lots of advantages to having a deposit in the basement rock relative to the unconformity. And what they basically showed to the world was there are large, high-grade deposits in that basement rock. So when we're looking to pick up these projects, we were very clear we wanted them to be on the fringe of the basin, so we could actually drill into that basement rock with relatively shallow holes. So on most of our projects, we can get into that basement rock within the first 100 metres, which is pretty helpful given sort of the cost of drilling in the Athabasca Basin. You basically need to wait to the winter, so January, February, March to get out there. But we'll be very methodical and deliberate in what we do here to make sure we're driving value for our shareholders and we're drilling the highest target priorities. The last slide, and it's a little left field, but it's very important from a valuation perspective. We actually have a gold project here in New South Wales called the Enmore Gold Project. It's not far from Armidale in the New England region. The guys put 1,200 metres into this deposit last year, came back with 174 metres and 1.8 grams. It's not true widths. It was a bit down plunge into the mineralisation, but whenever you got 174 metres at 1.8 grams, clearly shows there's a system here, a potentially pretty high grade system, got 30 metres at 3 grams. The last 3 metres when they pulled out the drill rig were at 8 metres, and that's still pretty shallow, right? So we're going to get back out here. We're going to do another 1,800 metres diamond drilling, do some orientated core, really understand the orientation of the mineralisation. Everything's lined up. As everyone here in New South Wales knows, it's been extremely wet here in New South Wales, so we just need to dry out a little bit. We've got the rig lined up, got the permit lined up, so we're very keen to do that, but long term this asset doesn't belong in this company, so we'll look to be doing something with it once we just put a little bit more meat on the bones. So that's the last slide. I think the overarching proposition I'm putting out here is that we've got the right team. You want to be in the nuclear space, you want to be in the uranium space, and if you're going to do that, you want to be in the US. And we're working very hard on building out those assets and working our team. So thanks for listening to the story.
Thanks, Andrew.